after reviewing the quarter 3 performance for Indian pharma peers, what we understood is that against the negative expectation about the impact of the demonetization in pharma sector and all that, they have not, means industry has not witnessed that kind of a negative or degrowth in the quarter. Rather, to some extent, the growth performance was muted, but it was slightly better than expectation only. But one surprising negative element of what we found in the quarter is that US is continuously showing some sort of one more bout of pricing pressure on the generic businesses front. It is largely flowing from the fact of this channel consolidation, what we further seeing in US business front. So that is a bit kind of concerning area. But overall net what we believe is with the improvement that we are seeing in the plant clearances front by US FDA for various Indian pharma companies, the approval flow has improved meaningfully over last 1 or 2 quarter period, and that should be supporting the US generic sales growth for key Indian peers. And along with that, we should be seeing gradual improvement in the domestic formulation business front also, with the less likely impact of demonetization going ahead. So, but net our call on the sector remains almost same in the way what we maintained earlier also. We would stick to our thought process that one should really focus on large cap stocks rather than looking at the mid cap stock. Why? Because valuation gap hardly you would find between the mid cap versus large caps, and large caps are have almost started recovering from their near term low because of the regulatory issues or pricing pressure and all that. So here on we should see a kind of sequence and improvement for large caps so far as US business is concerned, and obviously in the domestic formulation business also large caps will do better than the mid caps. So that way the theme is very clear that focus on the investment focus should be on the large caps, and in large caps what we see are the preference remains same like last time. And it is investment in focus should be on the lupin would be the topic for the sector, because with no plant issues, they have recently cleared the pending plant issues with the US FDA, and after that they have started seeing meaningful improvement in the ANDA approval front. So that should be supporting the growth momentum. And the quarterly call also, Lupin management has indicated about key product opportunities for FY18, which assures about a strong double-digit growth for the US business. So that to some extent comfort us, and that makes us our topic rating in the space as Lupin. And subsequent to that, we do still believe that Sun can do well, and Sun would be the second in the rank in terms of investment recommendation. And subsequent to these two portfolio plays, we still believe that the kind of investment comfort or the kind of margin of safety in terms of valuation what we see in case of Aurobindo and Glenmark, we should remain positive on those two names. Again, a contra call what we have been maintaining is Divi's Laboratories. Against recent past, what Divi's has witnessed negative observation from US FDA for one of their plant, that has really crashed the stock almost by 30-40% in the immediately after the 483 observations what they have witnessed. But I think it was largely because of the kind of uncertainty rather than negativity. And I think at this price point, after such a sharp correction, the stock price already factors the negativity beyond, means it has fallen beyond the kind of real impact of the negative observations what US has cited. So I think it should be a kind of with a calculated risk, one should definitely remain positive, and against everybody's expectation that possibly after the negative observations, clients should really be cancelling their procurement orders from DVs. Practically there is not a single kind of a cancellation of procurement orders by any of their customers. So that supports our contra call also. We do remain still positive at this moment for DVs. Yeah, thank you.